Welcome to Mishap Mastery. My name is Abhishek. Have you ever wondered what a foreign letter of credit is and how it works? Well, let's delve into this fascinating world of international trade. A foreign letter of credit, also known as FLC, is a pivotal instrument in global commerce. It's a financial document, essentially a promise, issued by a bank on behalf of its client, the buyer. Imagine the bank as a trusted middleman, stepping in to ensure that the buyer and seller, often separated by vast oceans and differing legal systems, can engage in business with peace of mind. The bank, by issuing the FLC, assures the seller that the payment will be made once the agreed conditions are met. So, in a nutshell, an FLC is a bank's commitment, guaranteeing the buyer's payment to the seller. This instrument is not just a piece of paper, but a guarantee of payment to the seller. Why is a foreign letter of credit so vital in international trade, you may ask? Well, let's delve into that. In the realm of international trade, uncertainty is a constant companion. The seller, located in one corner of the globe, and the buyer nestled in another, may never meet, yet they must trust each other to fulfill their parts of the deal. The seller must trust that the buyer will pay, and the buyer must trust that the seller will deliver the goods as promised. This is where a foreign letter of credit, or an FLC, comes in, serving as a beacon of assurance amidst the fog of uncertainty. FLCs are essentially contractual agreements issued by a bank on behalf of a buyer. This agreement assures the seller that they will receive payment, provided they meet specific terms and conditions. This way, the seller has a guaranteed promise of payment, even if the buyer is unable to fulfill their commitment. But it's not just the seller who benefits. The buyer too can breathe a sigh of relief. With an FLC in place, they are assured that their hard-earned money will not be released until the seller has met the agreed-upon terms. This could include anything from the quality and quantity of goods to the time frame of delivery. In a nutshell, an FLC is a win-win for both parties. It mitigates the risks associated with international trade, allowing businesses to expand their horizons and reach out to new markets with confidence. It provides a shield against the potential pitfalls and uncertainties that come with dealing with unknown entities across national borders. So, whether you're a seller wanting assurance of payment or a buyer seeking to ensure your money is well spent, an FLC acts as your safety net, providing you with the security you need to conduct your business with peace of mind. In essence, a foreign letter of credit is a safety net in the world of global commerce. It's not just a piece of paper, but a crucial tool that fosters trust, ensures security, and facilitates the smooth flow of international trade. What makes up a foreign letter of credit, you may ask? Well, let's dissect this financial instrument and get to know its integral parts. First off, we have the issuing bank. This is the financial institution that commits to pay the seller on behalf of the buyer, provided the terms of the agreement are met. The issuing bank plays a pivotal role as it acts as a guarantor, ensuring the seller that they will receive their payment. Next, we have the beneficiary. This is usually the seller or exporter who is entitled to receive payment. The beneficiary's details are explicitly stated in the foreign letter of credit, which includes their name, address, and other relevant information. Then we come to the amount. This is the maximum sum of money that the issuing bank agrees to pay the beneficiary. It's a fixed amount and usually corresponds to the value of the goods or services being traded. Moving on, we have the expiration date. This is the date by which the beneficiary must present the required documents to the issuing bank to receive payment. It's a ticking clock that keeps everyone on their toes, ensuring that all parties adhere to the set timeline. Lastly, we have the special conditions. These are specific requirements that the beneficiary must fulfill to receive payment. They might include things like presenting certain documents or meeting specific standards. Each of these components plays a unique role in the foreign letter of credit process, and they all work together to facilitate international trade. They ensure that both the buyer and the seller fulfill their obligations while providing a safety net that protects all parties involved. So there you have it. The foreign letter of credit is a symphony of different components, each playing its part to ensure smooth and secure international transactions. Just like how a watch needs all its gears to function, a foreign letter of credit needs all these components to operate effectively. Understanding these components is crucial to comprehend the functionality of an FLC. Because after all, knowing the parts helps us understand the whole. How does a foreign letter of credit work? Let's delve into the process. Firstly, The transaction begins with a sales contract between the buyer and the seller. The buyer then applies for a foreign letter of credit at his local bank, known as the issuing bank. This bank will require the buyer to have an account with them and may request collateral to secure the transaction. The issuing bank then sends the foreign letter of credit to the seller's bank, known as the advising or confirming bank. This bank verifies the letter of credit for authenticity and forwards it to the seller, informing them of the established credit. Now the seller can confidently proceed with the transaction. They prepare the goods for shipment and compile the necessary documents, such as a commercial invoice and a transport document. These documents serve as proof that the seller has fulfilled their part of the sales contract. The seller then presents these documents to their bank, who examines them thoroughly to ensure compliance with the terms and conditions of the letter of credit. If everything is in order, the advising bank sends the documents to the issuing bank. Upon receipt, the issuing bank also scrutinizes the documents. If they are compliant, the bank then debits the buyer's account and transfers the funds to the advising bank, who in turn pays the seller. This concludes the process of a foreign letter of credit. Throughout this process, each party has their role to play. The buyer and seller negotiate the terms, the issuing bank guarantees payment, and the advising bank acts as an intermediary, ensuring that documents are in order and facilitating the payment. This process, while seemingly complex, ensures a smooth and secure transaction. It provides a safe avenue for international trade, mitigating risk for both the buyer and the seller, and ensuring that both parties fulfill their obligations. So next time you're involved in an international transaction, consider the benefits of a foreign letter of credit. Are all foreign letters of credit the same? One might be tempted to think so, but the truth is, they're not. In fact, they come in various types, each with its unique features and applicable scenarios. Let's delve into the world of foreign letters of credit, or FLCs, to understand this better. First, we have the revocable FLC. This type can be altered or cancelled by the issuing bank at any time without the consent of the beneficiary. It offers flexibility but also a degree of uncertainty, as it relies heavily on the issuer's reliability. A revocable FLC might be used in situations where the parties have a strong, long-standing relationship and trust is well established. Next, we have its counterpart, the irrevocable FLC. Unlike the revocable type, this one cannot be changed or cancelled without the agreement of all parties involved. It offers a higher level of security for the beneficiary, making it a popular choice in international trade where the parties may not have a long history of dealings. Then, there's the confirmed FLC. This is essentially an irrevocable FLC with an added layer of security, a guarantee from a second bank, usually in the beneficiary's country. This second bank, known as the confirming bank, steps in if the issuing bank defaults. A confirmed FLC is often used in scenarios where there are concerns about the issuing bank's reliability or the political and economic stability of the issuing bank's country. Finally, we have the unconfirmed FLC. This is an irrevocable FLC without the guarantee of a confirming bank. It's less secure than a confirmed FLC, but is sometimes chosen for its simplicity and lower cost. So there you have it, 4 types of foreign letters of credit: revocable, irrevocable, confirmed, and unconfirmed. Each type has its strengths and drawbacks, and the choice among them depends on a variety of factors, including the parties' relationship, the reliability of the issuing bank, and the economic and political conditions of the countries involved. Different situations call for different types of FLCs. Remember this adage as you navigate the complex landscape of international trade and finance. So, what have we learned about the foreign letter of credit? Well, we've delved into the very essence of what a foreign letter of credit, or FLC, is. We've seen how it is essentially a guarantee from a bank ensuring the seller gets paid as long as certain delivery conditions have been met. We've understood its importance in the global trade landscape, providing a safety net for both buyer and seller in international transactions. We've also dissected its components, each playing a crucial role in making the FLC a reliable financial instrument. We've walked through the process, highlighting the steps involved from issuance to payment. And we've explored the different types of FLCs, each with its own unique features designed to cater to diverse trade scenarios. Indeed, the FLC is more than just a document. It's a testament to trust, a beacon of security, and a facilitator of global commerce. A foreign letter of credit, then, is an essential tool in the complex world of international trade.